Today's stocks continue to have a little bit of some weakness here early in the morning, but that didn't last. We got some good news on the debt limit front middle of the day, and the market rallied as a result of that. Didn't change much from yesterday. In fact, today's range was pretty much the same as yesterday's range, and pretty much a very similar outcome in terms of closing near the high of the day. But the after hours, a little bit of a follow through, so that might change going into tomorrow. We might actually have some bullishness. We might follow through with this. So the question is, how much follow through do we need to change this around? So what are we going to be watching for? What did today's rally and yesterday's rally look like? What kind of damage has been done from a bearish standpoint? Have we had so much damage that we're kind of extreme and oversold and ready to bounce? So I'm going to break all that down in today's video. We're going to take a look at a stock that has made the pattern that you need to see from a market standpoint for a reversal to occur after a pullback. And we're going to talk about how to trade that. So let's go ahead and get started. Today is Wednesday, October the 6th, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the market forecast indicator. As you can see, we are back to being less than 2% below the moving average. The near-term line has rallied into the upper reversal zone with today's move. That's a nice good rally there up above the 80th percentile. The momentum line rallied, but not necessarily to strong levels, but at least it's getting well into the bullish territory, which it hasn't done yet during this little decline. Not even during that rally did the momentum line get up and even into the bullish territory at that point. But the near-term line did get into the upper reversal zone there and is doing it again. And again, now it's just a matter of, is this the peak, or will it get up here above 90, which increases the odds, right? Nothing's ever 100% or 0%. But if we can get the blue line up above 90, then that increases the odds that the intermediate line will make its way towards the upper reversal zone. And remember, getting into the upper reversal zone is really when the trend gets established. In this case, back to the upside, as we are now in the lower reversal zone, which is so rare, not very common for the intermediate line to get down there. But so that's where we're at right now. You notice we didn't close above like these highs. There's a bunch of days worth of highs here that we didn't get around. Though we did close above the high of the low day. There's the low day there. We closed above that. It wasn't above yesterday's high, but it was above the high of the low day. The intermediate line turned up, but still in strong bearish territory. That's why. So we're still well below the moving average. We're not threatening a dark green shading in the green line anytime soon. We are definitely in, obviously, intermediate pullback mode here. If you take a look at the Dow Jones Industrial Average, you'll notice, we haven't gotten back. We got back into the retracement area between 38 and 62, but we haven't gotten through that. We also didn't close above those highs either. And short-term sentiment looks great. It looks better, but it's not like breakout good, not yet at least. And you can see it's intermediate line in bearish territory. It is a little bit closer to the moving average. That's why we are now just down less than 1% below. Looking at the NASDAQ 100, you can see its short-term sentiment looks very similar. It is more than 3% below the moving average. Its intermediate line got down close to the 5th percentile, down to the 6th there. We did break the 23% retracement of the post-Halloween move. We haven't come close on any of the others, but we did on the NASDAQ, and we've rallied back up today, but again, not really clearing these levels necessarily. We did get back above the 38% retracement of this current intermediate run that it's on in red. So relatively positive sign from there. Again, it only had broken down for a day, so it's not like we are reversing a significant move here. If you look at the Russell 2000, its intermediate line is actually still, all four lines are in neutral territory. So the Russell 2000 continues to be like this anomaly, like it's not going anywhere. Everything else has been pulling back, and the Russell hasn't been bullish, but it also hasn't been bearish either. Its intermediate line's been at best, it's actually gotten into bullish territory during that little rally. But at worst, it's been just kind of stuck here in neutral, with the market sentiment line also stuck here in neutral. But in this particular case, we got dark pink shading in a red line, so keep that in mind. But again, not really breaking out one way or the other. I mentioned to you on the DMI The DMI for the S&P 500, the positive indicator, is extremely low. It hasn't been down to, I mean, obviously outside of COVID where it got really low. The last time we were down below 10 was fourth quarter 2018. We did get briefly down there here. We got down to 10.96. We're at 10.29 right now on that intermediate pullback there that we've rallied off of. You can see the fourth quarter 2018 it got down there. In 2016, prior to the election, it got down there. You can notice on the COVID drop, the COVID low point, though, the intermediate line the negative indicator got a lot higher. Even on this low point in fourth quarter 2018, the negative indicator got a lot higher. So one thing we're getting with a really sharp drop in the positive indicator, we're not getting a real sharp increase in the negative. And you can see the ADX is above 30 for the first time again for a while. It didn't get above 30 on that bullish run. It got to 28.9. Over here it got to 30.3, so we're at 30.9 on both these intermediate runs here, which actually kind of one big one, but on both of these intermediate runs, if you were to break these up, then these were both, the ADX is higher now than it was then. You can see there's that first intermediate rally that culminated in a parabolic move to the upside. It was kind of two, as you can see, the first one there, and then it pulled back, and then the second one that got the ADX higher. And then you can kind of see over here that you get these moves to the upside, and the ADX, on a bearish run, it got to about 31 on that go around. Of course, fourth quarter 2018, it got up to 36, even more than that, all the way up to 45. So, this is hardly the makings of a sharp decline. Hardly at all, but it is enough of a decline to be an exhale, a shallow exhale, but enough an exhale nonetheless. But we looked at the Russell 2000 on Monday, and you can see how both lines were dropping. Well, yesterday both lines did get below 20, which is unbelievably rare to get both lines, the positive and the negative, below 20. Obviously, the ADX is down to teens, to almost to 10. The negative indicator did jump up. It's still not above 25. Your positive indicator broke down. It's still below 20, but it's just crazy to have both of them, which again kind of reflects just the lack of directional move we're getting on the small cap index. We're still bearish on the Hakinyashi candles here. Obviously on the Russell 2000, it's not necessarily the case. So we are in a red arrow and negative candle and a falling PPO. So we're getting a lot of arrows. Remember, I told you before, a lot of arrows is a coiling sign, and man, coils can lead to big moves in one direction or the other. We'll see which one it ends up being for the Russell. Let's take a look at the 3 green arrow chart. Light pink shading still on all of these except for the diamonds. The diamonds, you can see we have 2 green arrows. So, but again, we don't have the 3 until we get the 3 green arrows, and we're green. And you can see sometimes you might get 1 days of green, just like when you're on a bearish trend, just like you get 1 day of pink when you're on a bullish trend. So we need to get to the green shading, and need to keep the green shading for more than just 1 or 2 days for us to be trending or turning back around here. You can see how the MACD and stochastics are turning up. If I take a look at the 2-line version of these charts, you can see the S&P 500 is back above the 8-day moving average. And again, it's closing above the 17 that really matters. You notice we are up in the after hours quite a bit with this debt limit news. So 436, that's right. 437 is the 17 days. So we need to follow through on that momentum, on which is, overnight trading is low volume to begin with, but the Asian portion of the overnight trading, where right now there's really only one market open globally, is the Asian markets. And really, I don't even know if I think that's just barely opening. For a while there, all you've got really is like New Zealand, and then you start getting like Tokyo, Singapore opening up a little bit later in the evening. But not until Europe opens will you actually get halfway decent volume for the overnight session. Of course, all the volume, good or bad, for the overnight session is extremely light compared to the regular trading session. But that's why I don't put a lot of stock into any moves that occur during the Asian session. It is the lowest volume portion of the lowest volume portion of the day, if that makes sense. So, but if you look at like IWM, which has been, all those lines converging on each other, the Russell 2000 closed with a little bit of a hammer there, but closed below the 200-day moving average. So you can see we've done this before. 1, 2, 3. This is really 1, 2, 3 times. This would be the fourth time that we've closed above the 200. So first time we got right back above it. The second time we got right back above it. Took a couple of days, but we still got back above it. And then this time we got right back above all the lines. So now the question is, are we going to get back above the 200-day again? So again, we're up to 220 in the after hours. That's about right where the 200-day moving average is currently. So we'd have to really kind of follow through with this movement. Let's take a look at the intraday chart for the S&P 500. Lower high, lower low. We did close slightly lower high. The point of control is right here. Remember, we're at 436.32, so about right where my cursor is right now in the after hours. You can see if we get through this area, if we get through yesterday's high point, which is also the day before, Friday's high point, and even last Wednesday's high point, if we can get through there, there's not very much volume up here. We get a good run up to pretty much 445 if that's the case. But if it holds, you expect resistance to hold until it doesn't. So again, the expectation is we'll probably just hold this and make our way back down. Again, there's less volume below us than there is above us right now with this point of control. So if you look at, again, IWM, we lower high, lower low, and we did close at yesterday's low point and at the high, closer to the highs of the day, but we didn't get back above yesterday's low point. So pretty bearish, not slightly less bearish than it could be. Had we closed above yesterday's low point, that would have been better, and had it started to fill in that gap, it would have been a little bit better. But still relatively bearish there, bearish candle, and you can see the Qs, kind of an outside day. I mentioned in a tweet, about how there was, this chatter about, you can't see it now, but there was this chatter about why we were selling off early and then why we were rallying late. But these green dotted lines were orange because these were today's. Now we have a new day in the futures contract. And then yesterday's high and low were the green dotted lines. And it was interesting because as gloomy as the headlines make the market sound a lot more perilous or a lot more bullish than it really is, because today's highs and low on the futures contract, which includes the overnight trading, was exactly the same as yesterday's high and low. So it doesn't really matter what happened today because it was the exact same thing that happened yesterday, and there's not much difference. It's not until you break out that we now start to say, okay, something's going on. And there's, like I said, a little bit of a good move here to start the session, albeit in the weakest volume portion of the lowest volume part of the day, the overnight trading session. So going back to the volume today and the trading range, so, oops, not that one. Be this one. So our range was over 7.5 points, is well above the average. 7.5 points, 112 million. So not as strong as what we've seen, but when you put those numbers in context, 7.5 points is above the chart. That's here at the top. 112 million is also up here at the top of the charts. Those are still all higher than average, so that moves it higher. And as long as we continue to get these kind of moves at the 6-7 point range, 100 million, 150 million, as long as we keep getting those moves, but successively to the upside to get above these moving averages, great. But as long as we're below the moving average and we can't get through them with these big moves, and these still remain bearish, positive or negative, remember, it doesn't matter if it's an up day, you get your biggest up days and down days when you're in bearish runs. And a lot of times your bearish runs typically don't end until you've had, if this is the end of the intermediate run, this might be one of the first intermediate peaks that we've had, or drops that we've had, since 2019, when the volatility index was actually in the low teens and would jump up to 20. This would be the first one since that we haven't jumped up to 30 during the intermediate decline. You can see during these market sentiment declines, you got above 30. On both of these in 18. On the intermediate, the little bit of an intermediate decline in the middle, it got up to 17. But these two intermediate declines in 2019 got above 20 from very low levels. And you can see the one intermediate decline you had in 2017 came from single digits and got up to about 17. And then you can see that market sentiment decline in 2016 got a jump up to. But you can see there were jumps, albeit from lower levels, there were jumps. We haven't got a jump yet in volatility here. And we especially don't have, you can see how the blue line gets above the purple when you're done. That's a sign that you're done. We haven't got the blue line, which is historical volatility, up above the purple yet. And one of the other rare things that we haven't had happen yet during a decline is we haven't had volatility get above 100%. Now it's making its way towards 90. If we were to get back below 20 and back below 90, then and get back above that 17-day moving average on SPY, then I think that we may be done for this. I don't think we've had the pullback yet. I think that would still be forthcoming, but this little bout of volatility would be done for however long. We'd be back up above. So that's a really important indication to watch over the next day or two to see if that's. I don't think that will happen. I expect that we'll probably get some more volatility before the week is over. But if we do turn things around, then that's how we'll know that to look at things differently here. Finally, let's take a look here. I forgot to show you the one other chart I had on my list here was the Bollinger Bands. So again, another sign that we've turned things around is we're in the upper half, at least in the upper half, if not the upper quartile. And we have a falling bandwidth. We are back above the Keltner channel, right? So we are back above whoops, I don't want to delete it. We are back above the Keltner channel here, easily back above the Keltner channel. And remember, we were actually below it on the Qs, where we were the worst on Wednesday. So we're back up above it, but we're easily still in the lower half. We're getting some positive momentum, but the bands are still outside the Keltner channels on the Qs. The bands are outside the Keltner channels on the SPY. So, to change things around, we need to get back into the upper half, at least into the upper half. Remember, ideally, good intermediate rallies start with a break up above that upper band. So we'll kind of keep our eyes on that if we are turning things around. IWM, of course, is, like I said, coiling. Again, that's one of the bigger gaps you'll see between the bands and the Keltner channels right now. And the bandwidth is still falling and is at really low levels on the 52-week basis. And there's no momentum down here. And we are in the lower half of the middle. More often than not, we're in the lower half of the middle quartiles. So obviously we're kind of pushing, there's a little bit of bias to the downside here. If we're going to break out of this coil one way or the other, we'd be leaning towards the downside until things change there. All right, before we look at some other charts here, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen, hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us two things. Number one, you liked our video today. Number two, you want us to do another video again tomorrow. Quick way to give us feedback if you like our stuff. Of course, if you don't like our stuff, you don't have to click on anything. Also, while you're down there, comment. What did you get out of the videos today? What stood out to you? What questions or comments do you have? Post those in the comment section. Join our website at marketscholars.com. There's a link popping out up there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content between the videos from day to day. There's my handle there at DavidSettle42. And join our Market Outlook Facebook group that we've created. Also, if you're watching us here on our blog, check some of this other stuff out. Over here on the right, you can see our Market Outlook live video. If you click on this, you can also click on Market Outlook Live Trade Review. It takes you to this page. You can review all the previous trades we've done to see whether we're still in them, when should we get out of them, how should we get out of them, what we're watching for. So I talk about that. I also put on today's trade idea that you'll hear at the end of this video. I've already put it on in the account here today. I did that during the video as well. You can see all the archives of prior videos there. You can see our upcoming classes we have over here on the right. If you click on View More right there, or come up to Trading Rooms and click on that, it takes you to our calendar where you can see all of our upcoming classes as well as our recordings going back for 3 years. Click on this heart icon right there. We got over 100 likes, so thank you very much. Click on that heart. It opens up this new page. Hit that like button. Also click on this thumbs up icon. Opens up another new tab. Hit that like button as well again eventually here. The more you do that, it gets our content out to more of our followers. That's the highest number of people that have seen our Facebook posts in a long time. So thank you very much again for doing that. That helps us out when you like those. You can do it right there, right here from this page. It also benefits you because Twitter and Facebook promote content from your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us right here. All right, now let's take a look at what's driving the price action. You can see commodities really dropped off. So commodities had been doing very well. In fact, over like really the past few weeks, if you go back out to just like 2 weeks ago, you can see commodities had just been killing it, right? And so obviously they pulled back down today. You can see long-term bonds had been the worst. Again, that's with the yields rising. This is a very inflationary story, right? When commodities rally, no matter, even with a strong dollar, or not a strong dollar, but a dollar that wasn't dropping, a dollar that was higher, commodities were still doing well and yields were down. So outside of real estate not doing well, that's a very inflationary pattern. Markets expecting inflation pattern. Let's come back to just today. As you can see what we had going into today. Let's go back to a 5-minute here. And you can see, okay, well, bonds rallied after being down. Bonds rallied. Stocks rallied. Real estate rallied. So everything that was down was up. The dollar stayed up. The dollar just continues to rally there. And then you can see equities outside of the Qs were down. So small cap stocks were down, international stocks were down, and then commodity stocks were down. So today's move not as risk on as you would like to think it was, considering that we were bullish. And obviously there were, in the after hours doing relatively well so far. Here's the U.S. dollars move. Setting 52-week lows now. Today we got a new 52-week low on the U.S. dollar. Or on the euro, 52-week high on the U.S. dollar. You can see that 50% retracement level. Let me zoom out so you can kind of see these Fibonacci lines. So there's the rally right there. And again, we've talked about, kind of worst case scenario for risk appetite, and broadly would be for the dollar to rally up to, or down, in this case, down to about 1375, where that 62% retracement is, where the downward trending trend line, and it's a multi-decade trend line we have coming down here, about a 15-year chart. We are down 1.5% below the moving average, so we have that's about as deep as we get. So keep that in mind in terms of how bullish we are. The trend strength is pretty darn strong. We're above 80. We're not below -5 yet, but we're above 80. So we got a good strong trend going here. If you look at the directional movement index, you can see that we are up above 30. The ADX is rising. Like we're going parabolic. The positive indicator is already negative. We're actually kind of diverging right now on those indicators, and you can also see too that from a Euro-US dollar standpoint, we're diverging on the RSI, and the CCI is coming off of strongly low levels. So needless to say, the dollar is really overbought and the euro is very oversold. So we'll see if we follow through with this move or not. Get a little bit of a lower shadow, bigger than what we've seen on this drop so far. See if that leads to a rally to the upside. Bonds had been bearish, but bonds are holding this low point. So they kind of got below this important line. Here's the euro again, the dollar, where it's at relative to like its 50 and the 30 and the 50, and well below the 200. So that's what that's doing. Now, if you look at bonds, they had dropped below its 202, and yesterday looked like, might be a relatively bearish breakdown, but the MACD histogram is still rising. The MACD is, is converging on its moving average. We're not really extending away from the 200. So there's a good chance we can bounce right back up above the 200, which would also mean getting back above the 8-day moving average. So really important level for bonds to hold here. Remember, this would be a safety trade, right? If bonds were to rally, and you can see gold is also doing the same thing. It's already back above its 8 and 17-day moving averages. though you do have some pretty strong resistance up there at the 30 and the 50 day. We are in death cross environment for gold and, again, not death cross for bonds, barely a golden cross, but, we are back below the 200-day moving average. So that's not quite the picture you would say, oh man, safety trade's really overbought. Like, we should be moving now into a good new bullish run on equity, on risk, because risk aversion's overbought. Well, bonds are below the 200-day moving average, and gold is still in the death cross environment. So those are hardly, and the dollar is overextended. That's the one sign of safety that is overbought, but that's it. Even from a sector standpoint, today was the first day that you actually had the safety sectors outperform. If you come over here to October the 6th, and again go to like a 5-minute chart here, you can see utility, staples, real estate all rallied. And remember, XLK is kind of a safe haven right now, large cap tech. And then you had your cyclical areas, materials and energy, especially, and financials to a smaller degree, lagging, though they all kind of rallied once the news came out that we were probably going to get that debt limit extended at least until December. So, but those are your safe haven areas, and they're hardly overbought. They've been, in fact, the safe haven areas have actually been more oversold than anything, and they're just coming up. You can see, look at those strong moves to the upside. They're just now showing some bullishness. Everything is below moving averages, except for, again, energy and financials, which have been your outperformers, and industrials materials are below the moving averages, but their intermediate lines have climbed back out of the reversal zone, and now they're just up above 20. So not above 40 though, not out of bearish territory, not yet. Discretionary is the closest, but it's falling. Everything else is well into the lower reversal zone right now. All right, now let's take a look at our trade idea of the day. Let's take a look at Take-Two Interactive. Look at the nice little breakout it's had in the last couple of days, really getting through the moving average. See, this is kind of what you want to see in the broad market, right? Get some good bullish days to get you through the moving average, then it could slow down. The near-term line getting well up there, the intermediate pot line getting into the bullish territory, not up there yet, but getting 6% above the moving average is a very good sign. Nothing's 100%, of course, but it's a good sign nonetheless that things may be turning around here for this company. You can see its Hakinyashi candle is a nice, good bullish candle coming off a transition last week to a good bullish candle this week. You can't look much better than that. Good. You've got a rising PPO, you have a green arrow, and you have a really strong bullish size candle over 5%. It's a good sign there. If you look at the 3 green arrow chart, you can see we recently got 3 green arrows here, so we're in light green shading, and we've done it with some really good volume. First, we got the volume on the day of the 3 green arrow, and now we've gotten another day of good strong volume today. Looking at the 2-line version of this chart, you can see that we are well up above the 50-day moving average, but you notice we've got the 200-day moving average still above us, as well as this point of control. So not a lot of upside potential yet because of that resistance area. You can see we're above 60, we're well above 150, close to that 200 mark on the CCI. If you look at the DMI, you can see we're above 30 in the positive indicator, well below 20 in the negative. The ADX is already pretty high from being high as a bearish level, so really good turnaround. And then you can see the Ichimoku trend cloud was a bearish trend. It is no longer in a bearish trend, now has a weak bullish trend. We are up into the cloud. The red line's up above the price. Had to make a good run to do it, but got above the price. And now the green line's crossing up above the blue. So all bullish signs, not the most bullish, but bullish signs nonetheless with that resistance level that you have up ahead of us here. Let's look at the Bollinger Bands here really quick. You can see pushing up against the upper band, if not breaking through, and if I were to throw on the Keltner channels, we are up above, easily up above the Keltner channel and breaking out. Like the bands are already, they were already outside on the downside. So we have shifted from a bearish trending move to a bullish trending move, just like that. And so easily in the upper quartile, if not pushing. I mean, see, we haven't been in the upper quartile or even in the upper half for that matter for a while. and now we are easily up there. So let's kind of flip things around. So what we decided to do on this, because of that resistance, we decided, okay, we can't make a really strong long call opportunity, but we can at least sell a put spread. So we can sell the 160, buy the 155. This is what it looks like here. There is earnings coming up, so we need to be aware of that. Full position size for about 450 bucks. That break even level is sitting right there, so we'd have to pretty much reverse this. In fact, to get to, for us to lose 450 bucks, which is what we're trying to make right now, we'd have to fall all the way down to about 150. To kind of give you an idea of where 150 is on this chart right now, tape 2, we'd have to fall down. 150 is right there, so we'd have to fall all the way back below these moving averages. So I mean, we would want to be out at that point. It's obviously not going to do that. It's not going to pull back to 150 on the whim. It could pull back to 155. It could pull back down to about 158, and that's fine if it does that, as long as it doesn't go below the 150 mark, right? And right, you know, and gets back eventually above 160 would be the ideal scenario. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums. Open up any new threads with any questions or comments you have about today's video. Reply to other people's threads as well. And let's keep this conversation going. As always, thank you very much for watching. Remember to subscribe to our YouTube channel as well as our website at marketscholars.com. Like us, click that thumbs up icon. Like us on Twitter and Facebook as well. Comment on the video. Have a great rest of your Wednesday night, everybody, and we'll see you all next time.